John Cryan, thank you so much for speaking to Bloomberg. What a pleasure and an honor on such an important day for you. Now, you previously told shareholders that you'd like to avoid a share sale and build up capital organically. What's changed? And it was a difficult decision to change and reverse that strategy.
Well, a couple of things have changed. One is we have changed our course with the Postbank.
Yeah.
The current team, we slightly inherited this plan to sell Postbank, which was fine. But I think we never made a secret of the fact that it was a capital raising effectively. Yeah. And our CFO, Markus Schenk, and I have always said that given that it was a capital raising, it always had to make sense from a capital generation perspective. And it was always a strategic challenge. And the two were moving out of kilter. And we saw Germany improving as a banking market. We saw Postbank performing very well. It has, together with our Blue Bank in Germany, 20 million customers. And that's an asset not on the balance sheet that we didn't want to lose. So we decided that the best course of action for the group was to retain Postbank. And we needed effectively to finance that. The markets are also very strong at the moment. And we would like to capitalize on that by changing our agenda. We've been shrinking, we've been reconstructing, we've been changing the bank a lot over the past 2 years. And we want to move back into modest growth mode, controlled growth. And we just thought to do that, it would be helpful to add capital. And then finally, we were responding, I think, to the market. The market has been telling us that they still would like to see more capital strength. So we'd like to see our cost of debt come down, and frankly, our cost of equity come down a bit. And I think adding capital is the right thing to do.
But how confident are you today that shareholders won't be diluted again 2-3 years from now?
Well, we've set an ambition. We're using a regulatory target because it's the one the market tends to use of the Common Equity Tier 1 ratio. And we want to be comfortably above 13%. And that gives us a big buffer against our regulatory minima, or what we expect to be regulatory minima. And this exercise takes us above 14 pro forma. And we've announced some other capital release measures, the partial IPO of asset management, and then a number of disposals of very small businesses. But together they add up to probably around 2, if not a little bit more, of capital release. So taking it all into the round, I think that puts us onto a very firm footing. We don't see particular headwinds. Actually, the operating environment in the US, but also increasingly in the Eurozone, and especially in Germany, looks strong. And so we're reasonably confident about the future.
Did your top investors, any of your top investors, say they will participate in the share sale?
Well, we didn't do much in the way of pre-sounding. It's for a rights issue that often isn't the case, but we've had feedback from one of our investors who seems to be quite supportive.
So you think it will go on without a hitch?
Well, it's underwritten. So from our perspective, we feel that we've used some of the leading banks in the world. They've given us their seal of approval and underwritten. And I think Markus Schenk and I are going to conduct the usual roadshow, but we feel pretty confident it'll be fine.
John, talk to me about your asset management unit. So we've seen 6 consecutive quarters of net money outflows. This is not an ideal condition when you're IPOing part of it. Are you expecting positive net flows in the current quarter?
Yes, and when we reported our fourth quarter results for 2016, we actually said we'd seen a reversal.
Right.
And some of those outflows were a little bit technical, not to give an excuse, but we saw them particularly in our money market funds in the US when the government switched the rules to variable net asset value. And then we'd had a couple of very successful strategies in ETFs, and asset allocators just reversed that strategy. So we weren't too worried about it, but we're seeing a turnaround.
And the turnaround, so the trend will continue being positive?
Well, the investment performance in Deutsche Asset Management, one of the reasons we want to give it more prominence is its investment performance has been outstanding. And over 70% of our funds are above benchmark in the 5-year time horizon, and that's a tremendous performance. I think sometimes the division doesn't get the prominence it deserves, which is one of the reasons why we want to bring it to market. When
are you expecting this new strategy to actually show improved profitability, but also grow revenue?
Well, to some extent, the new strategy, to put it that way, is actually to move back, as I said, in a controlled fashion, gently onto a growth agenda. So, and we effectively did that at Christmas when we put one or two of our major pieces of regulatory issues and litigation behind us. We resolved some of them, as you know, over that New Year period. And from the beginning of this year, we've been in much more positive mode. So the capital raising helps underpin that. The big change in strategy, I guess, is in Germany, where we now face an integration process. We've owned Postbank now for some time, and we want to learn from some of the steps we took in the past. So we want to plan meticulously how we integrate the business. You won't see much action there for most of the remainder of this year because we're still completing on the Blue Bank side, as we call it, on the Deutsche Bank side, the restructuring program that's in course and completes towards the second half of the year. So I think it won't be before the end of this year, beginning of next year, before we implement that combination of the Postbank with Deutsche Bank in Germany.
And then it's a year from there?
We said it might be actually longer. We want to do things the right way in Germany, and it's very consensual. I think we successfully agreed with all the stakeholders the restructuring of Deutsche Bank in Germany, and we want to use that type of approach in looking at the combination of Postbank and our existing bank.
John, I know hindsight is a wonderful thing, but had you put this strategy in place 12 months ago, where would we be now?
Well, in order to retain Postbank, remember I described it as a capital raising. We actually needed to finance it, so we would have needed a capital raising. And I think a year ago it would have been much more difficult for us. There was still a lot more uncertainty. I personally feel much more comfortable sitting in the seat I sit this year, than obviously I would have done last year. We're feeling much more positive. As I said, the environment is good. We're seeing growth again. And to some extent, we've done a lot of the hard work. There's still quite a lot to do. So if the regulators are listening, we're still focused on improving controls and improving our efficiency. But there's going to be a lot more fun as we develop the business in future.
And when you say the markets are good, was it UniCredit that really distilled the fact that there was appetite for some of these share sales?
That would certainly have been a factor. Also, our shares, they hit a low at the end of September, I guess, and they've sort of doubled since then.
Yeah.
And so the markets look as though there's momentum behind the banking sector.
Yeah.
And so it looked possible as well as desirable. So the two met.
How many job cuts will be part of the strategy?
We haven't said, and it's not to be evasive, but we want to take the same approach as we took, as I said, with the restructuring of the branch network in Deutsche Bank, which we've done over the past, now, I guess, 21 months or so, most latterly last year. And we want to do it in the German fashion, so we want to involve all the relevant stakeholders, and we want to come to an agreement. Once those agreements are struck, it's actually quite an efficient process, and it just gets carried out with relatively little risk. So we haven't said yet, but we will in due course.
But could it be thousands? Tens of thousands?
It's unlikely to be tens of thousands. I don't think we have that. We're not that endowed with staff. But it will be. There'll clearly be some job losses in Germany.
Could you talk to me a little bit about your debt trading unit? So you vowed to regain market share. Given the bonuses, the lack of bonuses, and the restructuring there, how difficult is it for you to keep that promise?
Well, when we looked at, we announced our fourth quarter results, and we said that they'd been impacted clearly by a loss of market share. And just talking to clients and counterparts, while we were discussing the settlement of some of our legal cases, they were a little more reluctant to deal with us. We also said that once we'd settled 2 or 3 of those major cases, the big one with the mortgages, we saw clients and counterparts coming back strongly. And so we've had a good start to the year. You can never extrapolate 2 months. But our client engagement is fine. And clearly one of the reasons why we're raising the amount of capital we are is to underscore that we are not only strong, well capitalized, very liquid, but we're intent on growing the business. And so equally for our people, we always knew we needed to give them a vision. And it's difficult when you're in a company that's in reconstruction, and we're always talking about shrinking or reducing risk. Now we can stop talking about that and start talking about how we engage with clients and counterparts, provide solutions, and do what Deutsche Bank does best.
So you're absolutely confident that the debt trading unit will regain market share?
From where it was in the fourth quarter, it already has.
And it will continue?
It does seem to be, yeah. And we're putting lots of impetus behind it. And we will invest. To the extent we've lost talent in that business, we will invest. It's the core of our investment bank. It's what we do best.
John, I know there'll be a lot of questions on the markets about your future. I was on the call yesterday, and
Yes.
you said you're here to stay.
Absolutely. I would.
So why the appointment of 2 deputy CEOs?
I call it burden sharing a bit. It's a very, very large company. We're in many markets, and we obviously have an enormous presence in the US, here in the London market where I'm sitting today, and of course our German business. We're going to have to focus a lot on Germany in the next 3 or 4 years with the Postbank. We will be adding Frank Strauss from the Postbank to the management board to give a little bit more resource behind the efforts we need to engage with all the stakeholders in Germany. But I thought it was helpful, and the supervisory board agreed, if I could appoint Christian Sewing and Markus Schenk formally as deputies, so they can literally deputize when I have to be in 2 places at once, because juggling my diary is one of the frustrations of the job, and it's just helpful if we can have 2 people formally appointed as deputies who can step in and represent me and or the company on specific formal occasions.
Why was it done now and not 12 months ago?
For the same reason it was done at all. I mean, it's not that common, I don't think. It was just there's so much to do. We're all very busy. All of the board anyway, if you ask them, they're always out representing the company. But it was just helpful in the context of the 2 main divisions of the private and commercial bank and the corporate and investment bank. If 2 of those representatives, who happen to be German, could play the role of deputies to me, then that made sense.
John, I know we're running out of time, so just very quickly, what is the one thing that you worry about the most in the implementation of the strategy? Is there one thing that worries you, that you have to absolutely get right in the first 6-7 months?
Well, I think it always boils down to people, and our people have gone through a lot of restructuring, and it's continuing to motivate them. We do have restructuring work still to do in Germany, so we need to make sure that the vision is right and that we're dealing with people well, because they've been through this difficult 2-year period already, and there's a prospect of another 2 or 3 years.
Yeah.
So I think it's keeping people focused and motivated, and encourage that the company is fully behind them, and that we want to be successful again, and now we have all the resources at our disposal that we need to be successful again.
How much focus do you think shareholders will have on dividends?
Initially less, I guess. I mean, we're resuming dividends now that we've got the capital strength to do so. They're very modest. They're almost the legal minimum in Germany.
Okay.
For this year, we don't know. We will pay that minimum amount, maybe top it up a little. But it's really next year that we've said that we want to resume a much more normal style of dividend payment. And I dare say, given capital build-up, we will probably stage in the recovery of dividends, but it remains to be seen.
I know one of the questions on the calls yesterday asked you about M&A and how that looks like going forward. Do you expect a lot of more cross-border or domestic M&A, and do you expect Deutsche Bank to be part of it?
Well, to some extent, of course, integrating Postbank has a lot of the facets of acquiring the business afresh. So we're participating to some extent in consolidation in Germany. And I do think that the German market will consolidate domestically. It's been on that track now, and it may pick up the pace a little.
This year?
I think so, yeah. It's been in train for some time. It's modest, but Germany has many banks. And it's a bit of an outlier in Europe now, because we've seen in Italy and Spain considerable consolidation. So I do expect it to take place. Whether in the fullness of time in the next 2 or 3 years we participate further remains to be seen. But
on what?
Well, on the way the market develops. But with 20 million captive customers and half of those using our digital systems already, and Germany really embracing e-commerce and the digital world now with a lot of enthusiasm, I think we have tremendous prospects as we are.
Do you think overall Europe is overbanked?
It doesn't feel that way. No, not particularly. No.
John Cryan, thank you so much.
Thank you. Thank you.